You're watching ET Markets Live. Welcome to a brand new episode of ET Smart Investor, where we discuss all about your investments and much more. I'm Neha Vashisht, and joining us today is Chirag Muni. He's the Executive Director at Anand Rathi Wealth Limited. Thank you so much, Chirag, for taking out time and joining us today on ET Markets.
Thank you, Neha. Always a pleasure.
So let's quickly start with what's happening in the markets right now. A lot is happening. We've been seeing a lot of ups and downs, and mostly downs in the markets, especially when we talk about Indian markets. And in a general sense, the market has not done well in 2025, while commodities like gold and silver have performed well. And Nifty is only up just about 4% in 2025. So, what's your take on Sensex and Nifty as of now?
So yeah, Neha, we've seen, of course, like you rightly mentioned, that a lot of uncertainties, whether it's the tariffs, whether it's the wars, and so many such things happening, especially on the global side, is what is keeping the market at its toes. And that's the reason we haven't seen too much. But when I look at, and of course, like you said, that gold and silver are the ones which have kind of started doing well. But let me first comment on gold. Gold, of course, we know that it's more of an emotional asset, more sentimental driven. It's more of demand and supply kind of thing. And we've seen that in this uncertainty,
Mm,
generally gold demand increases. Especially the central banks like India and China also buying gold to kind of diversify from the dollar. So a lot of such things
yeah.
are kind of keeping the gold prices elevated till the time there is some stability in the market. And when you talk about silver, of course, silver also has some bit of demand, but specifically from the industrial use, where
Mm,
because there's a lot of EV, solar, all of these panels, semiconductors, all of that will require some bit of silver, and that is kind of again helped silver. But overall, if I have to compare all the three, I think we've always seen that equity has definitely given good returns in the long term. And when I look at Nifty, if you just do some comparison, if I'm a long-term investor and from a 5-year basis, if I have to actually add risk to my portfolio, which is equity,
mm,
then 82% of the times you're at least getting better than 10% returns. Whereas
yeah.
if I look at the same numbers for gold and silver, it is coming in the range of 40 to 50%. So which means it's a short-term flavor, which will always happen. But from a longer-term perspective, these asset classes have not been able to kind of beat Nifty.
Mm,
And having said that, currently, of course, like I said, because of this uncertainty we are seeing, and the good part is that despite this uncertainty, we are looking at almost a similar market that we saw in last September. We are about 26,000. We are a little down from there. But
mm,
despite all these uncertainties, we have seen the markets, cushioning itself. So I would say it's an opportunity that you've got 1 year of time and price correction both.
okay.
And with the underlying trajectory from an Indian perspective looks very strong despite the global risk. I would rather look at it more from an opportunity perspective rather than saying that
Mm,
things are going south.
okay. Chirag, if we talk in terms of mutual funds, do you think the 100% tariff decision by Donald Trump could affect the mutual fund performance in the pharma sector?
So we have to understand the 100% tariff, of course, have come in, but if you look at it, the 100% tariff is more on the branded and the patented drugs, and not on the
Mm,
generic drugs, right? So if you look at the Indian pharmaceutical, exports, overall exports have been increasing tremendously. Last year, I think it's about $30 billion of exports, out of which about $8.5 billion was going to the US. So of course, the noise will say that there has to be some impact. But if you look at the overall, demand or the supply that we are giving to the US market is more from a generic perspective, generic drugs,
mm,
because India actually has almost 20% of world's generic demand. So that's the kind of supply we are giving to the US market, and which is almost 90% of their prescription. So since they are not part of the patented branded drugs, it is the impact will be
mm,
limited. Of course, there will be some
okay.
specialty drugs which will be part of it. But overall, if you look at it, the generic drugs have not been. And also, they have mentioned that if you have any kind of broken ground, in the sense that if you have added any manufacturing plant, or you're planning to almost start to a manufacturing plant in US, then again you will be exempted, and many of our large companies are looking at that. So I feel
Hmm.
the overall impact has to be lesser. Number one. Number two, also, if you look at from a mutual fund perspective, like you had asked me, the if I look at all the sectors together across all the categories, then the exposure to the pharma sector, the healthcare sector, is about 8 to 9%. So to that extent, again, the impact is limited, even if there is an impact,
Hmm.
because we don't have a large exposure towards that sector. Of course, if you're purely pharma fund, then obviously you will have some kind of impact in the short term because of the volatility. But other than that, I don't see a major long term impact on this particular thing.
Okay. All right. So since the markets have not performed exceptionally this year, most investors are not in a great space right now. So how should they approach the rest of 2025?
So, like I mentioned to you, Neha, of course, the good part is that the market has gone through both price correction and time correction in this one full year. The peak was, of course, around 26,000 last year, and this year we've almost seen a 22,000 level, and now we are back to about 25,000 levels. So if you see, a 1 year has passed by, and we almost come back to the similar levels. I
Hmm.
would say that, like I said, it's an opportunity. Why I'm saying this, that if you look at equity, you have
Hmm.
to look at it from perspective of in how much time. So, whether it's the long term, medium term, or short term. So when I look at the long term, it's specifically driven by macros. And when you look at
Hmm.
Indian macros per se, I think most of the macros are in our favor. Whether you look at GDP, which was the last quarter 7.8%, and expected to end the year at about 6.5%, and which most people are still maintaining despite the slowdown. So six and a half
Hmm.
percent, we are the largest, the fastest growing economy, large economy. Whether you look at inflation, which is again at the lowest at about 2.1% in August. If you look at interest rates, we have already cut 100 bips. So we are at the lowest interest rates. So when bond yields are low, again equity valuations go up. Of course, earnings, there was a little bit of issue because of the overall uncertainty, but we expect a lot of back-ended demand coming in, specifically on the back of this GST cuts, which the government has done on
Hmm.
the income tax cuts, and also they are increasing their expenditure in the economy. So all of that is a multiply effect on the economy and the demand. And so from a long-term 3 to 5 year perspective, I don't see an issue.
Okay.
Till the time this global uncertainty will stay, of course, markets will not give some kind of direction.
Hmm.
But at the end of the day, underlying fundamentals stay strong. Like I said, in the medium term, it's the earnings, so we have to wait and watch. But our sense is that our earnings are likely to come back. And also, if you look at the valuations, are pretty fair currently at a reasonable 20 times 1 year forward P. If you look at the market, ideally
Hmm.
should be around 25,000 levels, which is where it is around that level. And if I look at
Okay.
1 year forward P, then from that perspective, we are expecting the market to be around 26 and a half, 27,000 by the end of the year. So that's a good 10,
Hmm.
11% possibility of a return. And of course, short term nobody can predict, so we would not be able to say. But of course, liquidity would be one thing that you have to look in the short term. There also, when we have
Hmm.
seen from liquidity perspective, whether it's retail, which is the SIP, it's continuing its momentum. 28,000 crores of SIP is coming last month as well. Previous month also it was in the similar range. So the retail has become matured, and they have continued to give the liquidity. So the domestic liquidity is strong. FIs, of
Yeah.
course, have been selling. We have seen that. But if you look at
Hmm.
the derivative market, if I look at the first week of September, we look at something called as a long short ratio. And the derivative market,
Hmm.
the FIs were sitting 92% short and 8% long. But if you look at yesterday's number, then we are talking about almost 84% long. So that means they have removed the shorts, which is some kind of
Hmm.
indication, short-term indicator that they are kind of reversing their trends. So all of
Yeah.
that makes me believe that I think it's a fantastic opportunity, if you ask me, if you have a 5 year horizon for sure.
All right. Let's also talk about SIFs right now. There's a lot of talk in the market regarding SIFs. So, can you tell the audience what are SIFs and what are the trends in the market for SIFs right now? Because a lot of other companies like Edelweiss, SBI has also launched their SIFs. So, what's the deal all about? How one can go for it, and what is the ideal investor for SIF?
So whenever some new kind of category comes and product comes, obviously there is excitement around, that whether we should
Mm,
participate in these kind of things or no. But it's very important to understand that what this, what is the purpose and objective of this of these kind of products. So these are called
mm,
specialized investment, vehicles or specialized investment funds, which is specifically there was a missing link between a retail which was 500 rupees or 1000 rupees also can be invested in a mutual fund. I'm talking about from a AMC perspective.
mm,
And then they had PMSs which were almost 50 to start with 50 lakhs. So there was something missing in between, and which is where there was a gap in the industry, where the industry felt that we should have these kind of vehicles. So minimum for these products have become 10 lakh rupees. Now these are
mm,
not very simple to understand if you ask me, because they have obviously there are three categories they have mentioned in equity, debt, and hybrid. But within
mm,
that, they've also determined that how much of these are basically long short positions, so they can take derivative bets. 25% of that can be unhedged. Rest can be, of course, neutral, but they can also have specialized equity. So it's a mixture of three or four things that they doing. So it's very important to understand that how these are going to play out. See, we have always
mm.
seen the skill of a fund manager, especially the Indian fund managers,
Yeah.
where they've been able to give excess return on the long-term equity asset. But when it comes to derivatives, it's a different ball game. So if they're going to use derivative to generate the additional return, then we'll have to wait and watch. So this is definitely a no-no from a retail perspective currently, because obviously minimum also is 10 lakhs, plus the
Mm, mm,
complication of how the product is structured is also very important to understand. Second is to see the track record itself of how the fund manager is going to play out. So I think currently, I mean, there is enough out there. It's better to wait and
mm.
watch. But yeah, it's a very new category, so we'll have to wait and see that how it performs over a period of time.
All right. You mentioned about FIIs also, so I would like to talk the next thing about DIIs versus FIIs. So FII ownership is lesser than DIIs as per the latest data. That means that retail money is not fueling the D Street right now from FIIs. It is mostly run by the DIIs. So what is the trend saying, how the trend has changed in terms of FIIs and DIIs in the last few years? And what is the take on FIIs for this year?
So, yeah, you're absolutely right. We've seen that there has been a lot of FIIs selling. That's the trend currently, of course. If you look at from a last year, 1 year perspective, 12 months, they have almost sold 2.5 lakh crores of equity. They've gone out of the market in the cash market. But the good news is that the DIs have almost cushioned that with buying 7.5 lakh crores. So if you look at the overall holdings on the DI and the FI side, currently, I think they're almost equal, about 17%. In
Mm,
2015, the overall DI holdings of the market was about 10%, which has now moved to 17. Whereas it was around 20% of the FIs, which has moved to 17%. So it's not a
mm,
significant change if you ask me. It's been more of a recent phenomena than actual allocation change for an FII, and which we'll see
yeah.
it over a period of time that it will come back to its overall average of about 20%. So I don't see it as a major reason. Of course, in the short term, we have seen a lot of outflows. So we will see that this trend will change. The other trend that we are looking at least in the rotation perspective, they are kind of moving from large caps to mid and small caps, which is again will
Mm,
favor the mutual fund categories of mid and small cap, where they have exposure to those categories. So that is
yeah.
something that FIF trends we have seen. But the good news, the volatility has been cushioned because of the
Mm,
DIs, and which is a great news from an Indian perspective, because they're not no longer dependent so much on the FIIs. Despite their selling, we have seen the cushioning that our retail investors are kind of giving, specifically
mm.
from SIP, where we are seeing 28,000 crores of money flowing in without any timing of the market.
Right. So you mentioned about mutual funds. So let's talk about mutual funds. And the one fund I want to, a fund house I would like to talk about today is Quant. So Quant is not doing so well right now. What is happening with Quant mutual funds? Is there a specific reason? Is it due to the churn? What exactly is happening with Quant?
So yeah, Neha, I mean, Quant has, as an asset management company, has gone through its challenges. Last year we know that there was some negative news around the insider trading and
Mm,
stuff like that, which SEBI was investigating into. But that's why there were a lot of, the fund manager didn't have the flexibility to move too much, because they might have redemption pressures to some extent, and obviously not no more additional purchase. So all of that obviously restricts the fund manager's ability to quickly move and rotate and churn. And of course, they had their own views of remaining in cash at some point in time, where there was a little bit of market movement from 22 to 25,000 levels.
Mm,
But having said that, if you look at the recent performance, actually they've been most of the negative news are out, and they have actually come back significantly well in the last I think 1 odd month. So if you look at the quant large cap, it is one of the large best category funds currently. So my
mm,
sense is that I think most of the negatives out, and you will see a recovery of that fund could be also very fast, because the way this fund manager acts is it's very flexible in terms of taking decisions on the data, and not worried about too much peer pressure of somebody's holding something, then I also need to have a certain
mm.
allocation. And they're very fast from that perspective, and this is what we have seen, which makes them unique from the other AMCs. So I think that the recovery will also be equally soon.
All right. So before we close, let's talk about investors a little bit and then we'll close our session. What will be your suggestion to investors for next 3 to 4 months? Which type of themes or which type of mutual funds to go for in the near term?
So, I mean, not having a 4 month horizon for sure. You need to have a
Not the
longer
horizon,
horizon.
but just how to handle the markets, because we know that the situation in 2025 is not so great for equities right now. It might bounce back. A lot of experts are also saying that few sectors could see a little bounce in terms of whether we talk about banks or maybe other sectors. But I feel that for this horizon, I think a lot of people are looking to invest for the rest of the year to, of course, long term. So keeping that in mind, what would be your suggestion to those investors who are wanting to put money in the markets right now for the longer term?
So yeah, absolutely. Again, I think don't fall for again, obviously there'll be a lot of noise around certain themes again. So, but I
Mm,
wouldn't say that you should again look at thematic for any reason, because you
okay.
anyways get exposure to these some of these sectors through your diversified category of funds. So because what happens in thematic, you have to really time the market, and
Yeah.
which is not anybody's skill. So beyond the point,
Mm,
it's better to be diversified, and these diversified categories also have given is reasonable alpha or reasonable excess return over their benchmarks. And
mm,
so currently in the overall uncertainty, I would say you should more be towards large cap, about 55
okay.
60% large cap, and about 20 25% mid cap, and the rest could be in small cap. I think that's the overall diversification that one should look at. And that will give you a clear category. Never go for regular categories of large cap, large and mid cap, flexi caps
Mm,
of the world, which can give you this diversification, and it will give you obviously exposure to most of the sectors that you were talking about, that can
mm,
have a quick recovery. So but I would say that have a mix of 4 5 funds, which
okay.
caters to these 4 5 categories, and it gives you a good mix of 50 60% large cap, 20% small cap, and 20% mid cap. If I have to name a few funds, Neha, I think DSP large and mid cap is something that we can look at. There is Kotak
Mm,
mid cap fund, Investco small cap, HDFC flexi cap, and ICICI Pru focused equity. I think if you have a basket of these 4 or 5 funds in the next 3 4 months, shouldn't be worried. I wouldn't be worried too much to stagger your investments. Again, like I said,
okay.
on the back of a 1 year depression in the market, it is always a good thing to kind of put lump sum. If you
Mm,
have a 4 5 year horizon, it would not matter in the long term. Short term, it might have some
long run.
volatility, but
Okay.
long term, you will take care of it. Yeah, absolutely.
All right. Well, this marks the end of our segment for today. Thank you so much, Chirag, for taking our time and joining us today on ET Markets live stream.
Thank you, Neha. Thank you for calling me as usual.
Thank you so much. Thank you, everyone, for joining us today.